Kia ora, Mr. Wilson here for revision number 4. Well done on doing revision 1, 2 and 3. I especially love to see those results coming through on the Kahoot and the improvement you're getting through with those. Today we're going to be working through the 6 adjustments we did in yesterday's revision 3, and we're going to put those into the trial balance. I'd like you to get your 1B5 and write out the trial balance for semi-samosas. Press pause, get that in so we can work on that. Thanks. Great, welcome back. So today we're going to work through these balance day adjustments here, the ones that we did in the last revision. So I'd like you to work through with me on this. So we'll go through each one. I want you to yell out a definition. So when I say the one, press pause, yell out the definition, and then check it against what I've got. Number 1, accrued expenses, definition, pause, go. That's right, expenses owing by us without GST. The accrued means without GST. There's only 2 that can be accrued expenses. What are they? Good. Interest and wages or salaries. Accrued income, definition please. Good, so that's income owing to us without GST. Again, there can only be 2. What are they? Good, so that's going to be dividend income owing to us or interest income owing to us. You can see over here we've got shares in Little India Limited, so that's what it could be from. Accounts receivable, definition please, pause. Good, so that's income owing to us, and that's including GST. Accounts payable. Good, expenses owed by us, including GST. We'll have an invoice for both of those accounts. Income in advance. Good, so we've received income before we've earned it. And last one, prepayments. Good, an expense paid in advance. So onto these adjustments. So that we're going to put these adjustments into the trial balance. Number 1, the loan is interest only and some interest is still owing. Which one of the 6? Good, accrued expenses. What side does it go? Debit or credit side? So write it in. Now the amount for that, we've got the loan is interest owing. The loan was 50,000 at 5%. So 50,000 times 5% is going to be, well, 50 times 10% is 5,000. So it'll be 2,500. So interest over here should be 2,500. So we've added 500 this side, add 500 that side. If you want to see that again, just go back and rewind and play that again. Once you've done that, click off number 1, accrued expenses, done that one. So I'll cross it off here too. Next one, invoice sent to customers, 9660, including GST, cost price 3,000. Now we know that one's going to be accounts. Is accounts receivable or payable? Sent to customers, accounts receivable. So we've already got accounts receivable, but what I'd like you to do is do a calculation for me before you start. So I've got my trusty calculator here. And I'm going to go 9660 divided by what? Good. So I'm going to split this figure into 8,400. That's the sale amount. And then the GST, 9660 minus 8,400 is 1260. So one step at a time, that 9660, you're going to add that to 4,000. Done the first bit. 8,400. You're going to add that to sales. And the GST, the 1260, we're going to owe that more because we're collecting this for the government. So that'll be 3,260. The second part of this is the cost price of that inventory was 3,000. Because we sold that, that inventory is going down. So we need to cross it out here. And our inventory goes down 3,000 because we've sold $3,000 worth of inventory. Where is the other half of this? Where does the cost of that goods sold? gives it away, eh? So we're going to add it on. Nice. That was a tricky one. Again, rewind it and go back and check it if you're stuck. Number 3, we've got 9,200 of advertising has been paid in advance, including GST. So expense paid in advance is called. Good. Prepayments. What side does prepayments go? Where are you going to write it? Okay, we'll write it in. Just be careful with the figure here because it says including GST. So back to your trusty calculator. 920 divided by 1.15. So the prepayments actually only 800. So we'll take the GST off because that GST, when we paid it, that's when we'll claim it back from the government. So rule for in advance is everything happens on the same side. So 800 plus. So we're going to have to minus on the side. What was it for? Advertising. So you're going to take it off advertising. You're 800 off there. All right, that balances now too. Our next semi receives $1,000 a month per rent for renting out his ovens. So rent received is $13,000. If it's $1,000 a month, how much should that be? Good, so change it. So did he receive $1,000 in advance or owing? All right, which side does income in advance go on? Debit or credit? All right, write it in. And how much did he receive early? Let's write 1 month's worth, which is $1,000. So we've got plus 1,000 minus 1,000. Again, because it's in advance, everything happens on the same side. Cross it off. An invoice on hand for a new oven, 11,500 including GST. Because it includes GST, it's going to be accounts payable. Good. So we just need to split that. Nice, easy calculation. Divide by 1.15 is 10,000 and 1,500. So the accounts payable is the full 11,500. So add it onto here. So we'll make that 11,500 and 3,000. Did that bit? Good. The 10,000 is for an oven. So where's the oven going to go over here? Hopefully you found equipment. Going to add the 10,000. Oops. 23 up to 33. Good, that's the 10,000 bit. And the 1,500, we can claim that back off the government because when we pay for things, the government allows us to claim it back. So we're going to minus it from that 362. Whoops. 3260 minus. So 1760. Awesome. Done that bit. One to go. So we've done a little bit of all of those. $800 dividends owing. So here's dividends received. 800. Owing means add on. Add 800 on. If it's dividends owing to us, there's no GST. So which one of these is it? Accrued income. Good. What side does accrued income go? Right, write it in. So you've added 800 down the bottom here and 800 over here, so it balances. Now I'd like you to go through and just classify it. We may as well classify them all. And so you have a go and press pause and then have a look at what I've got. Okay, so I'll read those out. Accounts receivable CA, advertising DC, bank CA, PPE buildings, COGS, OE drawings, FC interest, CA inventory, PPE equipment, AE office expenses, investment asset, shares in Little India. I've just put E for wages. It could be DC if it was sales wages or AE. We'll make that AE. If it's office wages, CA for prepayments, CA for accrued income. CL accounts payable, OE capital OI, other income and dividends, CL GST, NCL loan, that's non-current liability, OI rent, I sales, CL accrued expenses, CL income and advance. Notice that those other ones you bought in are all either current assets or current liabilities. Great, so that's the end of the video. The task for you to do, I'm going to send you another one of these, and what I'd like you to do is to adjust the trial balance. You can do this one on spreadsheet if you like, or write it out. So I'll send you this with a little smiley face if you get the classification right and the figures right. Good luck with those. Thanks for joining me. In our next session, we are going to be looking at the other 6 adjustments. Ka kite, thanks for joining, and I'll see you next time.